Good evening, guys. It is Monday, April 5th, 2025. This is Bathrobe Business. I'm Georgi Oganov. I got my decaf coffee and I've got the news. Fairly quiet day in the market. There was a bunch of chatter. The big story was Donald Trump said that he would be tariffing movies that are produced overseas by 100% tariffs, and then 2 hours later walked it back. I think that's a silly thing for multiple reasons. I don't even know how you would enforce something like that. I don't know why you would enforce something like that. So I'm not really going to address it, but just know that that's out there in the ether. He also signed an executive order that's supposed to allow for more domestic manufacturing of drugs and pharmaceuticals. That one may have some repercussions. It's really just trying to cut red tape at the FDA. I would argue that the biggest problem with the FDA is the structure itself, not so much the red tape, but that's a debate for a different day. So just know that that is happening as well. Now, first story I want to talk about is the report that came out on Friday. The April jobs report. So let's go to that story real quick. This one was a pretty positive story overall. So the U.S. economy grew by 177,000 jobs in April, beating expectations of 138 as far as the Wall Street estimates. However, there was a net downward revision of about 58,000 to the prior 2 months. That revision doesn't worry me too much. We've had that with pretty much every single jobs report. Sometimes they're revised up, sometimes they're revised down. Sometimes I report on it, sometimes I don't. The key metric to look for is unemployment. Unemployment remains steady at 4.2%, and the average hourly income did grow by 0.2% month over month. So we're still seeing wage growth, and we're still seeing unemployment remain steady. Now, there is something interesting in this article that I was a little surprised by. So, April jobs report underscored the labor market. No, I'm sorry. Yes, it is that. So, the April jobs report showed that there was growth in government jobs. But the interesting thing is there was once again a contraction in federal jobs. That's very interesting to me because, as far as I knew, the Doge was kind of a failed experiment that didn't really go anywhere, and they had pretty much ceased all operations since Elon Musk had left. Now, I exaggerate a little bit, but I thought the greatest cuts had already been made. However, federal government jobs declined for a third consecutive month, down 9,000 for the month. Since January, federal government employment has declined by a total of 26,000. Now, again, this is not a massive reduction, but it does show that Doge is still actively active. I'm going to withhold any additional comment. I'm just going to mention that, and then we can move on to the meat and potatoes. So much of the job growth came in the form of healthcare and manufacturing. So that is something that is to be looked on positively. Give me 1 second. Let me read through this. Where is it? Okay. Healthcare, transportation, warehousing, social assistance, financial sectors, etc. Notably, transportation and warehousing jobs grew by the most since December, as businesses likely front-loaded trade in anticipation of the tariffs. So there is some glimmers that the economy is actually doing better than we anticipate. However, there is still a lot of headwind. Another interesting story was what came out today out of Ford. So Ford suspended 2025 guidance amid a $2.5 billion tariff impact. Now, they actually did have a good quarter. They met and I believe exceeded their Wall Street expectations. But they're saying that because of tariffs, they're going to be seeing an impact of $2.5 billion this year. Now, they're saying that they can offset about $1 billion of that, but that still does leave about $1.5 billion in losses. However, they're better positioned than General Motors. General Motors is expected to see about $4 to $5 billion in additional stress and cost on the company, as General Motors imports more out of the country than Ford. So two of the biggest manufacturers are telling you that these tariffs are hurting them. So if they're doing it, then more than likely all the other manufacturers are suffering in a similar way. Now, an interesting story that came out today was what came out of the SBA. So if you'll remember, I talked on this channel that even though it's always best to pair tariffs with a industrial policy, something like the CHIPS Act, you don't actually need to have an industrial policy in place. You could have capital markets in place because, let's be honest, that's where the United States actually shines. However, I had talked about how there hadn't been any movement or any change at the SBA, which is the only real way to increase capital markets for manufacturing domestically. Well, that may be changing. So the SBA is set to change their loan limits from about 5 million to 10 million. So what does that mean? Well, essentially, it means. So I guess I should also preface what the SBA is for those that don't know. The SBA, the Small Business Administration, is pretty much the bank that businesses go to for lending. The same way you would go to Wells Fargo or Chase for a conventional home loan, most businesses would go to the SBA. These are small businesses, medium-sized businesses. They go there for everything from real estate purchases to equipment to working capital. We've used the SBA programs over the years as a business and will continue to use them in the future. Well, this is an interesting proposition. It's currently just being passed as a bill within both a joint Congress and Senate bill to increase the funding rate from about 5 billion to 10 billion, including one of the arguments being made that because of inflation, really the minimum should at least be 7.5, but at least 10 million will also spur American manufacturing. This is an interesting proposition, especially with some demographic changes that are coming with to the United States. Now, baby boomers are of course retiring, and many older Xers are retiring as well. That's always kind of a foggy line of, are you a young boomer or an old Xer? Are you a old millennial or an old Zoomer? So all those lines kind of tend to blur. But a lot of times what happens is when those people retire, they leave behind businesses. Without a good SBA structure in place, a lot of those businesses are going to struggle with finding sellers because oftentimes they don't want to sell or finance because this is essentially their retirement plan, or they just don't want the hassle of dealing with someone that could try to purchase their business and then run off with it. So the SBA is a fantastic thing that the economy needs right now because we're seeing this great shift in baby boomers and older Xers retiring, many of whom have businesses. So this proposition does play a great role in possibly boosting American manufacturing. Now, I should also preface this $5 to $10 million cap is really geared at American manufacturing. I didn't mention that. The only way you could qualify for the 10 million versus the 5 is if you manufacture within the United States. So this is directly aimed at manufacturing. However, towards the end of the article, it does talk about what's really probably hindering the SBA, and that is their own general rules. So I want to read this verbatim, but Mattis Smith, founder of Pioneer Capital Advisory, which advises small businesses, he hasn't seen much demand for manufacturing acquisition, in part because they're hard to finance and require deep industry knowledge. He views the bill more as more symbolic than a game changer, unlikely to usher in an increase in borrowing limits, especially at the SBA, as it's set to roll back looser pandemic-era rules and favor stricter credit checks, higher equity requirements, and tougher underwriting standards overall. So despite the fact that this is going to be increasing your ability to lend, or I should say the SBA's ability to lend, it's actually not changing the fact that capital requirements are becoming harder and harder at the SBA. Now, we applied for an SBA loan last year. We ended up not getting it. We had decided to finance ourselves, but it's incredibly difficult already to get SBA financing. It's a very difficult system. It requires massive capital requirements. It requires massive collateral up front. And these are considered the loose regulations. So despite the fact what they're raising the limits on, it's still incredibly hard to do an SBA loan. And this is why, again, I have to fault the Trump administration at not seeing this. If they really want American manufacturing, they have to loosen a lot of these regulations because this is going to hinder it more than anything else. So as a good comparison, let's say you qualified to buy a home and somebody told you, oh, congratulations, you no longer qualify for a $500,000 home, you qualify for a full $1 million home loan. Well, that sounds great until you find out now the requirements went from a 650 credit score to a 750 credit score, and you don't just need 10% down, you now need 30% down. That's essentially what's happening with the SBA. Despite the fact that they're going to be raising their limits, it's not actually changing the fundamental structure at the federal agency. And for many small businesses, this is really how lending gets done. There's really no other markets within the United States for business loans quite like the SBA. Everything else is much more difficult, much more expensive, and usually geared towards larger corporations. So that's pretty much it. Those are the stories of the day, kind of short and sweet. I will see you guys back here tomorrow, and I hope you have a productive Tuesday. Bye.